To talk a little bit more about the economic impact of the coronavirus outbreak, I want to bring in Derek Scissors, a AEI resident scholar, China Beige Book chief economist. Also, Bill Bishop is here, China watcher and author of the newsletter Sinocism. However, the thing I can't figure out, and I want to ask both of you, at least the way the stock market has reacted, you look over the past week, it's almost as if, guys, that this whole coronavirus hasn't even happened. Derek, what's happening here?
I think the stock market's probably right. As economists, we look at productivity, the labor force, the capital stock. China has 800 million workers. This isn't a natural disaster that destroys capital stock. As long as people recover fully from the coronavirus, which we all hope they do, it's not going to affect productivity. The market is looking down the road a year and a half and saying this is not a long-term economic event. In the short term, of course, there's uncertainty, but we kind of know what that uncertainty is. It's not an unknown in that kind of language. So I think the market says we're going to get over this. There's going to be a big bump to Chinese GDP in the short term, but we already know that. So we're comfortable with the level of risk.
What about U.S. or multinational corporates, virtually all of which have mentioned the coronavirus, in their calls over the past couple of weeks?
Right, but that's an earnings hit, again, in the short term.
Right.
The trajectory of China's growth, of demand for U.S. products in China, of Chinese supply in the global supply chain, that's all the same as it was. So, if you want to trade really short term, then fine, you're going to have a short-term earnings hit. But if you're looking a year out, those companies should be in the same kind of financial position as they were 6 months ago.
Hey, Bill, you're always my China whisperer. So take us inside of China, take us inside sort of the mind of President Xi and the people around him. What are they thinking? What are they doing? And what does it mean to our relationship with them?
Well, I wish I could. Just one quick comment on the market. Yep. I think the reaction today about the tariff cuts, it seems like the market's buying the same horse like the fifth time, because this is part of the trade deal. And so, that was, I think, to be expected. I think from the perspective of the Chinese leadership, this is really the biggest crisis they've faced in many years, perhaps since 1989, because they're looking at, as Derek said, I think this is a short-term economic hit, but they're looking at a significant economic hit of unknown duration. I think it'll be more than just this quarter. They're also looking at a massive human tragedy, which is affecting tens of millions of people right now, again, with no sign of it abating any time in the next several weeks or a couple of months. And then third, they're looking at, I think, a real potential failure of what we call performance legitimacy, where, they just spent the last year talking about the superiority of the socialist system, and now they're in a situation where, a province of tens of millions of people is effectively shut down, and people are starting, food is still in good supply, but you're seeing, a pretty significant stressing and failure in some areas of the medical system.
Okay, this is a jump ball for both of you gentlemen. I'm very curious where you land. Wilbur Ross made a comment last week, and he got killed for saying it, but I'm curious whether you think it's true or not. This idea, and maybe the markets aren't taking it this way, but that long-term multinational companies that were thinking about keeping their supply chain in China will think again, in part because of this. Do you believe that? Either of you? I'll go to Derek first.
I think people have been rethinking their China supply chains for a while. One, slowing growth. Two, a conflict with the U.S. that's not resolved by the Phase 1 deal. And then three, to echo a little bit with what Bill said, this makes the Chinese government look less competent. That may not be fair. Who could do better? It's unclear. But nonetheless, it makes them look less competent. It points to problems in information transmission, people not wanting to tell their bosses what's going on because it makes them look bad. It raises the possibility of another purge by Xi Jinping. So I think this adds to, it's not by itself enough to change global supply chain practice, but there's been a number of pressures in that direction. They may not bring any jobs back to the U.S., but I think the Chinese do have to worry about jobs leaving China.
And the question, therefore, Bill, is, are they worried about that, and what are they going to do about it?
Well, I think right now they have much bigger worries in the short term. I think the things like they need to get the virus contained and the economy back functioning. I mean, we're looking at, normally the factories would start filling up again, maybe end of this week, starting by next week. We're looking at March, best case, I think. And so I think that that is what they're really focused on. And then longer term, how they figure out whether or not they can slow the wave of decoupling. Good luck to them. I agree with Derek, but I do think that this just adds another very obvious risk to any multinational company, any company that's sourcing from China, where you just cannot have too much reliance on that one single country.